Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, May 29th, 2019, and this is the Daily Report for Gold and Silver. Weakness in the global equities markets, with the Dow losing about 200 points in terms of equities in the U.S., as real concern continues about the fact that the trade war between the United States and China has not been resolved, and if anything, it is widening in terms of the stance of both superpowers with no end in sight. That has given the dollar an upside boost, the dollar closing in record territory above 98 for the first time in about a year, and fractional gains in gold and silver. With the exception of platinum, the rest of the complex was higher today. Speaking about that, let's take a look at our price board. Traders, even with dollar strength, gold, silver, and palladium were able to show gains on the day, although fractional. Gold futures did close up by about $1.90 at $12.79 after hitting a high intraday of $12.8520. Silver also climbing a little bit, about 0.5%, a net gain of 7.5 cents at $14.39.5 cents. Platinum did decline on the day, $7.83. That's after a $4 decline on the day, and palladium gained about 0.6%, $7 at $13.46. And of course, the dollar was much stronger. We'll talk about that when we pull up our technical studies, but it did in fact close above 98 on the dollar index. Let's take a look at our technical studies. Traders, today I want to start by looking at a daily candlestick chart of June gold. I want to focus on this chart as well as a dollar index chart. There are two things that immediately jump out at me when I look at the daily candlestick. And the first thing is that we truly had a doji candle in which it opened and closed at the same price point. Opened 1278.90 and the close was 1279. Period. So the difference of 10 cents. That is what I would call a pure doji. The second thing that is interesting and really jumps out at you is the fact that the close was very, very near the lows of the day. And what I find impressive that we saw any kind of gains whatsoever is we had a nice strong dollar today, which gained about 24 points and broke above 9,800. We'll take a look at that in a second. But you can also see an upper level resistance trend line and a lower level support trend line. And what is interesting is we are fixing it off these recent highs as well as these recent lows. And traders, when we compress this particular chart so we can see the entire range, what we see is an extremely long resistance line starting from the top at 1350 with the second fixed point right here at around 1300. In terms of the lows, we are beginning at just below 1200, and our second fixed price was this last bottom that occurred at roughly 1269. When we do that, we really see this apex forming very, very soon, maybe a month or a month and a half. And because it is such a long compression triangle, if we do get that typical break of energy, that release of energy, I should say, we should see a fairly sizable move. Of course, that move can be to the upside or the downside. Typically, the way we look at it is it will return to the overall trend direction. And recently, that trend direction, without a question of a doubt, has been a corrective stage that really began to occur at around $1,350 per ounce. Traders, my recommendation is we continue to maintain a flat or neutral stance with no active trades in gold or silver. I do still believe, though, that we could see a nice spike to the upside if these fundamentals gain some traction. And traders, we are looking at a daily chart of the US dollar index, and it effectively closed and traded above 97.76. That is the 0.618% retracement, and it is the beginning of a former resistance area that really goes from here up to about 98, 98 being that key psychological number. Now, we have had occasions, as you can see on this chart, where the intraday highs actually dipped into this area, but on a closing basis, this is the highest close we have seen since the last time we were at this price point, which occurred about a year ago, although under a very, very different set of circumstances. And let me see if I can compress this enough so that you will see that. There we go. And what I'm looking at is the fact that the last time we had prices at this level, we had the market which first hit at around 103 and started a major correction. This, of course, occurred at the end of 2016. We saw the market have pretty much one straight drop to about 91. And, of course, the level that we're looking at, 97.67, occurred right here, but it was really a non-event because it occurred as this market was tracking lower. But in this instance, the dollar index breaking above 98 is a lot more substantial in that when this market reached its top at 103 and then traded to these lows at around 88, we were able to create a Fibonacci retracement set. And when we do that, the 0.618% retracement, which is a key number that you always want to look at, is precisely this area, 97.76. So the fact that it broke above it today, that is significant. Now, whether or not it can maintain above this price point is the next question, because this is not the first time we've had it trading near this particular price point, and we even saw an occasion in which it broke above it, but only that only lasted yet 3 days. So we'll have to see how this pans out in the future, but if we do see continued dollar strength, it will make it difficult for gold to move to higher ground. However, we are in the area that we would typically look for the market to back off and give a little bit back. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.